Hello, welcome back. In this video, we're gonna take the time to talk a little bit about day trading. I got asked about this, and since I've done it quite a lot, I wanted to make a dedicated video and kind of talk a little bit about it, what it is, and what are the ideas behind it. And back in the old days, when I actually first started reading about the stock market and trading, the book that I first read, the actual very first book that I ever read, was Steve Nison's Japanese Candlesticks. This one was a very bulky one and a very interesting book. And you may be aware of Japanese candlesticks. I'm pretty sure most of you know about these. But you may not know that Steve Nison was the person who brought these ideas to the West. Because as you can understand, Japanese candlesticks were mainly used in Japan. So the reason they became a thing back then is they were used amongst rice traders. And I don't know whether it's a legend or it's actually true, but it was said that there was a trader who actually developed these ideas and he had like 100 consecutive won trades because of these formations and actually understanding market psychology. So, what is day trading and how is it different to normal investing? Now, typically we have three types of sort of like trading and investing. It's like the day trading, the swing trading, and the regular investing, long term investing. Now, a day trader is a person who typically buys a security, a stock for instance, in a day and then sells it back in the same day or maybe even next morning or something of that sort. A swing trader is someone who actually buys a stock and holds it for like 1 month or 2 months, something of that sort, maybe a few weeks even, and tries to sell it for actually to get some money back out of the profitable trade there. And the long-term investor is obviously a person who actually buys something and keeps it for the long run. I have done all three things, and I have studied deeply about all of these really, and spent a lot of time actually understanding the ideas. Now, in terms of long-term investing, we only want to be taking a look and actually understanding the fundamentals of the company. We do not really care at all about Japanese candlesticks and technical patterns because they are irrelevant. A technical pattern is mostly trying to define and understand the market psychology. It is not about fundamentals. It is not even about the company itself. Now, when you are a day trader, you have to understand that you are not trading the company. You are not trading anything about the company. You are just trading a means of trading. It's just a ticker symbol, and so it could be anything. It doesn't really matter what it is. What matters is some important metrics. I will talk about it, and what's happening in terms of market psychology, and actually understand how to work your way around this. Of course, this is not going to be a primer about about day trading, but I'm going to explain some of the ideas so that you get a sense of what it is. You can see here some Japanese candlestick formations, for example. These are very well known amongst traders. Many people actually understand these. Some people understand some of these, and these are the core, basically the core patterns that are used for day trading patterns. And patterns are a little bit more involved, but these are kind of the first things that you learn when you actually examine the Japanese candlesticks. And they kind of show bullish reversal patterns and bearish reversal patterns. So, for example, this one would be a bullish reversal pattern. For instance, it's a hammer because it goes way below. It has a low tick here, and then it starts shooting up again. And so there are a lot of these patterns that are trying to guess and work out market psychology, and some of them may seem a little bit weird to you, but they do have some reason on why they are a thing and why you can actually use them when you are trading. Now, let's take a look at this one, the double bottom, which is a definition here. It's again a technical analysis charting pattern, which is about a change in trend and momentum. And when we're talking about day trading, it's all about the trend. It's very important to trade with the trend and try to understand what the current momentum is. So, for instance, you are seeing here a company that had a long-term, pattern that is actually going down, a downtrend. You will see that it started about like June, and then now we're at November, and it's still going down. Yet it seems to have been forming what we're calling sort of like a bottom, and by bottom we mean sort of like a support level. Why is that important? It means that, generally speaking, in terms of day trading, it means that we have a level at which the price stopped going down more. and it actually started going up again. Then it retraced a little bit, but then it hit this level again, and then it goes higher again, as you'll see here. You may not see this very well. This is another day here. It's not very obvious. But you will see here that this forms what we're calling a double bottom, because it has one tick here and another one here. And this forms sort of like, if you actually draw the line here, sort of like what we're calling a support level. Because people traded the company at these levels and then started buying. And then when it went to this level, then they started buying again. And so this, generally speaking, people and traders, day traders, will play it for a reversal pattern. They will actually think and assume that the price of the stock will go higher. And that's a double bottom pattern. Now, of course, you don't know whether this will definitely happen, but what you do as a day trader, and what I was doing when I was playing some sort of patterns that I had in mind, is I always had a stop loss. What is a stop loss? A stop loss is the price that you are willing to get out of a trade if it goes if it goes wrong, if it goes the wrong way. And so, for instance, if let's just say I'm buying here at $20, and I'm holding $50,000 worth of shares, because when you're actually day trading, you do day trade with a lot of shares, really, because you can hold them for like an hour, and so you're going to be making some significant money out of this. And so what you're willing to do is buy it at 20 and try to get a little bit of profit as it goes upwards, and potentially sell here when it reaches this previous high, for instance 22 that was. And so now we're sitting at 20 and this is 22. And so we are getting $2. We are gaining $2 if the trade is successful. Of course, we want to have some sort of stop loss here in case this goes wrong. Now, we typically don't want it to be at 18.5 here. But that's the case. That is the ceiling, the sort of like a support level here. So anything below 18.5 would actually take us out of the trade, and we would have a stop loss and be like, okay, this seems like it actually dropped below support, is what we're saying, and so I'm actually selling for a loss. It's my way to say that, okay, that I missed this trade, and I always need to have a stop loss, because otherwise I can actually lose a lot of money. And so typically, you want to be taking trades that are having like a 3-1 reward to risk ratio. So for every $3 you have the potential of winning, you want to be losing 1, let's just say. And this means that you can afford to lose 3 trades and just make money out of 1 trade and still recoup all the losses and be even. And so the idea is that in the long run you're gonna be making money. Now, how feasible is that? It depends definitely on how good you are, and especially how disciplined you are. It's very, very important to be disciplined and not just forget your stop losses, because you can get really wrecked if you let this go downwards, waiting for it to come back, in case your risk reward ratio is actually effectively annihilated by the stock turning around and going in reverse of what you want. And so you can say that definitely you can play this without even having this chart, if you think about it. Like, you could say, okay, stock is at 18, I am gonna bet till it goes 20, and I'm gonna sell if it goes 17, and then I have a 2-to-1 reward to risk ratio. And that's right. That's absolutely right. The thing is, a lot of people and a lot of machines and algorithms are actually analyzing this kind of patterns. And if you are not aware of this, there are even websites like, for instance, Finviz, as you can see here, that actually have technical analyzers, technical signal analyzers, sort of, that can actually tell you whether there's a double bottom or a double top here, and actually show you the companies that have those double bottoms or double tops, and all the technical patterns. Most of those, there are so many. And this means that traders are people. Don't forget about that. For the most part, there are machines too, but the machines are actually also trained by people. And so it's the same thing with chess. We have rules. There are rules, and these people and machines go by these rules. And this is why it pays to play the game. It is not something magical. It is not about like whenever you see a double bottom, it's automatically going up. But it's the name of the game. It's what people do. It's what people react to in terms of psychology. And so this is why it is important to actually understand what's going on here. And so you will see a lot of double bottoms here, for instance, double bottom, double bottom. So this one was actually a double bottom that went higher and actually was a successful double bottom. And again, another one that was also successful, and some ones that are actually forming right now that we don't know what they're going to be doing. Let's take a look at this one, RGTI. You'll see that the company is actually coming from a downtrend, from a long downtrend, and that was like at $11 here. And this is a monthly chart, and it's like a 6 month or so, maybe a year. And so you will see that it starts forming a double bottom. It had a downtrend here, and it starts to have sort of like a reversal pattern here. So it went down and then went up again, and then went here, but it didn't really breach the support level by much. If you were noticing these levels here, it kept breaching support, like it was going up and then going down again and down again. But now it hasn't breached support twice. And so typically you see like these double bottoms, and even better sometimes triple bottoms is even better, or you have this happen one more time, is the idea. Because a lot of people are actually buying at this level when it reaches this level, providing a psychological support. And so what you could do here is play over here, play it at 615. So be a day trader that day when it is 615 and it starts opening up in the next day in the market, and play it for a quick upswing to 8, let's just say 8, and then go get out when it goes 580 or something. And so if we take a look at this RGTI, we can actually go at today's chart. This is actually what happened today. The very last day this was traded, actually this is April 8 because it's today Sunday. And so you will see here that we kind of have a similar story. It kind of went down and had a bottoming pattern here. And this is why it's a good idea to never actually trade in the very first few minutes of the day. But you will see that it starts creeping up higher after that. So it has a bottom and it starts creeping up higher. So in this case, you're having a trade that didn't really do what you would expect it to do, like really swiftly go higher and higher, but yet it still had like a bottom, like a bottoming pattern in a base here, and then it started creeping up higher to kind of end up close to the day's high, but still a little bit lower. And so this is what a day trader would do. They would actually try to match the long-term trade and align it, basically, as we're saying, with the daily trade. And so try to find the trend, and typically they like to have trending companies, like this could be one as well, one that is going down, and play it for an upswing. Or even better, you try to find companies that are actually having days that were like 10% up or 15% up. The reason for that is that a lot of people are going to be trading that day. People will be flocking in, so there's going to be a lot of volume. And so this means that there's going to be more opportunity to trade and exit quickly, for example. And however, you do not want to be trading high float stocks, or stocks that have a lot of outstanding shares that can be traded, which are called the float, pretty much. And so if you take a look at a company that has, let's just say, 100 million shares, it's much different than a company that has, let's just say, 5 billion shares, like for instance Apple has a lot of shares, for example. Because when you have a lot of shares, it's gonna be tough for the company's stock price to move a lot. And this is why day traders tend to trade a lot of stocks that have that are low in price, and like mostly unknown companies for the most part, because typically they have much lower float. They have like 50 million or 40 million, so it's much easier to actually get movements out of the stock price. It can actually move 10% a day, 15% a day. That's exactly what you want as a day trader. You cannot just wait like for Verizon to get up 0.5% in order to make money. I mean, you could, but then you'd have to play with like $100,000 or $150,000 a trade in order to make this meaningful. While you can actually trade other companies that have a low float and just play 30,000 and have the same result. And again, it's not about the company. It has nothing to do with the company. It doesn't matter if it's Verizon or any other company that's well known, or it's an unknown company when you are actually day trading, because you are trading the chart and you're trading people's psychology. It has nothing to do with the fundamentals of the company. And so you will never hear me talk in this channel about technical aspects of a stock when I'm looking to invest in it, because they're completely irrelevant and frankly useless. they don't play a role at all. We don't really care what's going on in the company's financial, the stock's financials, the stock technicals. When we're about to purchase a stock for the long run, it's completely irrelevant. It's meaningless. So yeah, that kind of hopefully gives you an idea of what day trading is about. I can talk about it for hours, frankly. I have studied that a lot because I've always found it to be very fascinating, and there are very, very nice resources to read. I would definitely recommend Japanese Candlesticks by Steve Nison. Another one which I don't actually readily remember right now. I believe it was like the stock market whisperer, something of that sort, which I really enjoyed. A very well-known day trader. This has been books that I've read like a decade ago. I don't really do this anymore because, frankly, it's very, very stressful to day trade. You have to get up early. You have to actually have done your preparation. It's a job if you want to do it right, and you can make some quick money, but you have to have nerves of steel and be ready to sell your trade when it goes wrong. And sometimes you won't be doing that, and you will end up losing a lot. And this has happened to me. But thankfully, I have actually made money from day trading, although I haven't done it for many months or so. But I have done it for a few months, and I had to abandon it because, frankly, it wasn't really worth it for me. Again, I do swing trading sometimes, and I used to do it, but for the most part, right now, I prefer to be, a fundamental a fundamental investor, really, just buying companies that are looking great. And this is why I'm doing fundamental analysis, because that's the only thing that has an effect and matters when we're talking about a company in the long run, because then we're talking about an actual investment, actual cash flow, and actual money that gets produced from a company. And so hopefully that kind of gives you a clue on what day trading is, how it works, what are some of the ideas. Let me know if you enjoyed the video, if you found it useful, and again, if you would like to know more about a specific thing in terms of day trading. And you can always, ask whatever you like. I have quite some experience with day trading as well, so I may be able to help. And please leave a comment below in case you want to ask anything. And if you're not a subscriber, remember to subscribe, because if you have been a long time viewer of this channel, you know that we are on the works for a new tool. Actually, the tool is ready, but it's going to be available soon, in a few weeks from now, maybe a month or so. And so you may want to stick around for when that happens, because I will let you know how to get access. It's a pretty cool tool. So thank you for watching this one, and I hope you enjoyed and kind of helped you a little bit with getting some of the day trading ideas together. Thank you for watching again, and I'll see you in the next one. Bye bye.